Home prices are dropping fast, down 7% in Lee County and 9% in Collier. But here's the twist: pending sales are exactly where they were before COVID. So, what's really happening? At first glance, this looks like a market crash, but the numbers tell a different story. Interest rates just ticked up again, inventory is piling up, and buyers are finally regaining some negotiating power. But is this a temporary dip or a major correction? Let's break down the latest market data for Lee and Collier County so you can see exactly where things are headed and, more importantly, what it means for you if you're thinking about buying or selling. All right, let's break down this week's numbers. Starting us off with Lee County market snapshot, we have new listings are at 611 this week. That's down 1.8% from last week. Solds are up to 258. That's actually up 1.6% from last week. And then pendings, this is a pretty good improvement here. 407 this week. That's up almost 11%. So we do see a bunch more buyers entering the market here. And we're actually going to break that down in another chart where you can see where we are compared to not only last 2 years, but pre-COVID as well. Median sold price is actually down a decent amount this week, down 7% to 393.4. So again, that is quite a bit off of our all-time highs, which is around 425. Active inventory is also up again this week, 1.5%. So we still see inventory growing despite the new amount of buyers that are entering the market. Again, that's up to 94.29. And then interest rates, we did see start to come back up. They are getting close to the 200-day moving average, which when they do hit that, I expect them to drop, but you never know in this crazy environment, in this economy that we're in right now. Moving on to the Naples market, we have new listings at 181. That's down 21.3%. Again, with numbers so low, huge percentage swings like this are seen pretty much every week. So we shouldn't be surprised by a number at like 21%. Solds again, 72, very low number, so 33.3% down from last week. And then pendings, 141, that's only up 2.9%, which is surprising because the other numbers have huge swings, and we only see pendings only rose a little bit. Median sale price here, 890. That's down 9% from last week. Again, we were over the $1 million mark, down 10%. We've been seeing the swing between the 800 and $1 million mark pretty regularly over the last couple months, actually. Active inventory is at 3643, just up 0.2%. So it actually only increased two listings this week, went from 641 to 643. So not a huge increase there. And again, your interest rates here are the same. So home prices are down 7% in Lee County and 9% in Collier County. Inventory is climbing higher than we've seen in years. Interest rates just increased again, tightening affordability. But here's the shocking part: pending sales are still at pre-pandemic levels. So if the same number of buyers are still in the market, why does it feel like a crash? The answer comes down to supply. With so much inventory, buyers have more choices, which means homes are sitting longer, sellers are slashing prices, and competition is heating up for buyers, not sellers. So what do you think? Is this a full-blown market crash or just a much-needed reset? Let me know in the comments. And speaking of this so-called crash, let's look at the bigger picture. Yes, prices are down from last year, but they're still up 158% from pre-COVID. So are home values actually in trouble, or is this a golden opportunity? I get it. Prices are down 8% from their peak, inventory is rising, and media headlines love the word crash. But here's the reality. Even with this price drop, home values are still up 158% from pre-pandemic levels. This isn't 2008. Lending standards are strong and homeowners have equity. This is really a correction, not a collapse. The key takeaway: buyers now have more leverage than they've had in years, especially when it comes to negotiating on price, closing costs, and incentives. And speaking of leverage, let's talk about who's really feeling the pressure right now. Builders. Right now, they're cutting $50,000 to $100,000 off some homes, buying down mortgage rates to 4.99%, and throwing in thousands in upgrades for free. Here's what's crazy: some builders are offering all three at once. The discounts are insane, but the real question is, how long will this last? Here's the reality. Builders are fighting to move inventory before interest rates impact sales even more. 29% of builders cut prices in March alone. This means if you're thinking about buying, a new construction home might actually cost you less than a resale. But it's not just about discounts. Buying new construction solves some major problems that resale homes can't right now. Let me explain why buying new could be the smartest move you make in 2025. Sure, price matters, but let's talk about why new construction is a game changer in Southwest Florida. First, there's no flood insurance or major repairs to worry about in most cases. Second, they're built to newer hurricane standards for safety and lower insurance costs. Third, they're brand new, so that means fewer maintenance headaches. And fourth, they're move-in ready. No bidding wars, no surprises. And here's where it gets even better. Some communities are holding up their resale values better than others. That's why I put together a brand new 2025 Southwest Florida Relocation Guide to help you find the best communities for your lifestyle. Inside, you'll find the top rated golf, boating, and social communities, hidden gem neighborhoods most buyers miss, the real cost of living, and what to watch for. If you want a copy, I put a link in the description. So that's the latest on the Southwest Florida housing market. If you got value from this video, hit that subscribe button so you never miss a market update. I cover these trends every single week, and trust me, you're gonna wanna stay ahead of the curve in this shifting market. I'll see you in the next one, but until then, stay safe, stay positive, and more importantly, stay free.